Make sure you subscribe, share, and like the video. So today we are going to talk about the weekly outlook of this week. Currently now I'm in Kenya, it's 3:16 p.m. East African time. So let's start with, I guess we can start with gold. Let's see what gold is doing. Very nice. So this is the gold chart. Let's start with the monthly charts. You can see very clearly in the monthly chart, gold ilikuja, then it tapped this monthly fair value gap. Okay. After tapping the fair value gap, the next candle, that is the weekly candle, ilikuja ilienda juu with momentum. Whoop, with momentum. See, and mind you that look at how this candle closed the weekly. It closed without a wick hapa juu, ilifunga bila wick, without a tail. So this like a sort of buying signal. But let's go to the daily charts. We see what's happening in the daily charts. Now we have tapped the monthly fair value gap. Then it came back, it pulled back. After pulling back, it tapped this weekly fair value gap. You see very clearly, it tapped this, and there was also a daily fair value gap. This small one was a daily fair value gap. It tapped the weekly fair value gap, and again, it tapped the daily fair value gap. After tapping that, it reversed. You can see very clearly it reversed. So after reversing, this monthly fair value gap, to me, is a sort of liquidity. Since we mitigated this fair value gap or this imbalance, this monthly imbalance, this is a liquidity. And how we will come down to this place is after tapping this weekly fair value gap. Then I was aiming, we come down till we come to this fair value gap, monthly fair value gap. But look at now what happened. In the daily fair value gap, in the daily chart, there was also a daily fair value gap here. The chart came, it tapped, it rebounds back after tapping this daily fair value gap. Again, up here, there's also a daily fair value gap. Then it came, it also tapped. So we are now at this daily fair value gap. It's also tapped this daily fair value gap. So what you can expect from this place now, it's a sort of like a 50-50 now from this place. Either, let's go to the 4-hourly charts. In the 4-hourly chart, it's a sort of like a 50-50. Since we are in this daily fair value gap, and you can see very clearly, there was also a daily fair value gap here, which the market, okay, there was this 4-hourly structure here, which the market broke this structure, but again, after breaking this structure, it failed, this 4-hourly fair value gap here, it failed to hold price. It could have done something like this. If it could have done something like that, after taking these swing highs, this like the already formed higher high, not higher high, let's say low high. If the market could have come like this, tap this 4-hourly fair value gap and reverse from here, then after taking these highs, I will expect the market from here to come down a little bit. Then I take my longs. And what will be my target? This one. This could be my first target. But look at what the market did. It did not it did not do like that. So it came, it tapped. In fact, this 4-hourly fair value gap was invalidated. Yeah, it was invalidated. The market came. Again, there is this 4-hourly fair value gap. Right now, the market is here. It has came to this 4-hourly fair value gap. So what I'm expecting here is two scenarios. If we broke, if we invalidate this 4-hourly fair value gap like this, I will look for something like this, like that. After taking these swing highs, this high, I will wait for something like this. Then I take my long to this place. Yeah, that will be my first place. And eventually, my long-term target will be this. Okay, that's the first scenario. The second scenario is this. Now that we are in this 4-hourly fair value gap, and remember that this one, we have invalidated this 4-hourly fair value gap, we invalidated it, meaning it's a sort of the market wants to go further down. So my bias is I will wait, since we are in this 4-hourly fair value gap, I will wait for something like this. If we break this low like that, I will wait for a little retracement, then whoop, to the monthly liquidity. Yeah, it's I guess that is what I'm waiting for in the gold chart. Yeah. So it's sort of like a wait and see. Let's go to the DXY. That's the US index. The US index. Let's start with the monthly. And remember that the US currency has been having some bullish news. It has been having some bullish financial economic indicators. So what I'm expecting, all the currencies paired to US dollars, since we are bullish, the economic indicators of the US saying that we are bullish, I am expecting that all the pairs paired to US currency will see a bearish move. So let's start with this. Let's start with this DXY. DXY in the monthly, there's nothing actually in the monthly chart. The weekly chart, there was this resistance in the weekly chart. Yeah, there was this resistance. You can see it came, bounce back. Okay, we started here, bounce back, here, bounce back, almost bounce back. This place, and we said that the weekly candle which closed on this week, you can see it closed now with a week. It closed the week with a week, meaning that yes, it broke this resistance, but it was like saying, I am not yet ready to go further up. And you can see very clearly from the next candle, whoop, it came down with momentum. But for me, since the economic indicators are saying that we are bullish, I'm looking for bullish setups from this DXY. Now it came down. Now we are in the weekly. It tapped this weekly fair value gap. So we are in the weekly fair value gap. I am sort of waiting for reversals here to go up, to go long from this place. Let's go to the daily. The daily charts. There is nothing actually in the daily charts. Let's go to the 4-hourly. Yeah, the 4 hourly now, I don't like these gaps. I really don't like these gaps. But anyway, you can see in the daily chart, it has been breaking structure to the bearish. From this place, we broke structure to the bearish. We created this high, we broke the low. Again, now, remember that we are in the weekly, this zone is our weekly fair value gap. From this place, I was waiting for a sort of, let me delete this very quickly. I was waiting for a sort of, yeah, came down here. Remember this our high? We have formed this our high. We are in this weekly, we have tapped this weekly fair value gap. So I'm waiting something like this, of which it did. And a small retracement like this, then we go up to this high. This is our high. I will be targeting that high. And the way I'm normally doing it, I draw my Fibonacci tool from this place. Then 50% is this place. So I'll be waiting for retracement to this place, 50% mark. Then we go long. Let's see what Euro USD is doing. The Euro USD. Let's go to the monthly in the Euro USD. Euro USD, it came, we tapped the monthly fair value gap, then we retrace back. Let's go to the weekly. The weekly, there's, nice. Again, you can see there's this weekly fair value gap. Let me remove. There's this weekly fair value gap, of which we have tapped the monthly fair value gap. And for this market to reverse, I'll be waiting for something like we tap the weekly fair value gap, then whoop, we take this as our liquidity. Yeah, but we have not yet tapped the weekly fair value gap. So what I'm waiting also to see, since this DXY and the Euro USD are mostly correlated in the opposite direction, let's go quickly to the DXY. In the DXY, I am waiting. I'm still waiting for this DXY to come short to around this place for it to give momentum to Euro USD to go higher until this place. Until it tap this place, then we start going short. But if we do like that, okay, let's assume we do like that. Let's assume we have tapped this. For me to go short, I'll be waiting for something like we break structure to the downside. We start doing like that, I'll go short to this place. Yeah, very simple. That's my simple approach I'm using. Let's go to the GU. Monthly. There's nothing in the monthly. Nothing basically in the monthly. Weekly. Weekly chart, we can see that we have this weekly fair value gap in this place. Daily, this was an order block, a daily order block. You can see very clearly this an order block is the last sell candle before the buy. This was the last sell candles before the buy. So the market came to this daily order block, then it bounced back. Remember that the Euro USD had not already tapped the weekly fair value gap, but this one, it has already tapped the weekly fair value gap. So are we, can I short from this place? Let us see from the four-leaf fair value gap. From the four-leaf fair value gap, not really. We cannot say that we are ready to short unless we come like this, daily fair value gap, a bounce back. After a bounce back, then I'll go short. If this daily fair value gap is invalidated, I'll go short from this place, like this. The first target, this one, and perhaps this one. Yeah, but from this place, I guess you can't predict what the market is likely to do. Again, there's a daily fair value gap, so you might not know. Maybe the market wants to go to the daily fair value gap first before going down. So maybe it can come like this to the daily fair value gap, then it start rebounding back from that place. So I guess when you are trading, you have to have many probabilities. You don't have to be like stick to one direction. That is like being biased in the market. Market can do many things, so you need to be biased. You need to be probabilistic. Yeah, so this is my weekly outlook. If you have any question, please reach out to me. I'll be ready to help. Yeah, moving. Oh, before I forget, let's say Dogecoin. Dogecoin is cryptocurrency. This is my favorite coin right now. This is my favorite coin right now. I don't have any BTC. I don't like holding even BTC. Currently, I believe it is overbought. Maybe I trade BTC, but not holding it. It is bound to reverse any moment. So this is the 4-hourly candle. You can see very well. It has been consolidating in this place. It has been consolidating for a very long time. Then it broke this. It broke this consolidation. Again, after breaking it, it came down very quickly. It broke again. Then it came back to the consolidation. But to me, the way I trade cryptocurrency, I don't use supply and demand, all those stuff. I only use support and resistance and trend lines. Yeah, this is the way I am using it. Let me show you. This is a 4-hourly chart. Let me even go to the daily chart. The daily chart, you can see that it has started forming very clear swing highs and swing lows. You can see this is my swing lows. Yeah, very clear swing lows. So this is my trend line. Yeah. You can see that for a good trend line to be called a good trend line, it must have touched at least 3 swing highs or swing lows. For my case, this is the first one. Let me mark. Let us even mark. This is the first one. This is the second one. This is the third one. Very nice. The first one, second, third. After coming to this place, it bought. came down, this place, it bought. So what I'm waiting to see, and this line here is it's a sort of my support. If we do the average of this consolidation, this is the place I may say it's not like a strong support. It's not a clear support, but it may act like your support. The way I drew it is, I came with my fib tool